Tai Hui, Chief Asia Pacific Strategist with JP Morgan. Tai Hui, good morning. Thank you for joining us. Now, markets seem to be generally welcoming the BOJ's easing measures. What do you make of them, and what do you mind are the challenges for BOJ going forward?
Well, I think a lot of the hard work has been done by the BOJ. Now, the question is, can the government, Prime Minister Abe and his administration, deliver on other two areas or two arrows, as they call them in Japan, one of which is going to be on the fiscal side, whether they can continue fiscal spending in order to drive the economy. We are somewhat cautious given the very high level of government debt in Japan, as well as the proposed government sales tax that could be raised sometime in 2014. So that may well be a challenge. Secondly, a lot of the reforms that is, again, being promised by Prime Minister Abe, whether that will actually materialize, I think that, again, it's a challenge for the Japanese economy. So on monetary policy side, I think the BOJ have come a long way in terms of delivering what it's promised to do. Now the ball is very much in the government's court in order to deliver the other two areas of economic revival plan.
Right. So Tai, I mean, is it time to buy Japanese equities in a big way now after Kuroda's aggressive plan to bring back inflation in Japan? And what impact will all the money flowing into Japan's equities and its currency have on Asia per se?
Well, I think if you look at earning expectations by analysts, Japan is one of the first major markets in the world to see more upgrades than downgrades, and that trend continues really on the back of the weaker yen, as well as a general expectation that the economy will do better. So in that sense, I think based on earnings outlook, I think Japan equities still look very attractive. I think valuation-wise, although it has come some way since the end of last year, valuation on the PE or PB basis is still below their 10-year averages. So again, that offers some interesting proposition there. In terms of the currencies, in terms of the rest of the Asia, I think what you've seen this quarter, or rather first quarter, is that Japan has significantly outperformed Asian markets, and many would argue that the Japanese story has actually sucked in a lot of inflows, otherwise we have gone to the rest of Asia. I think that's probably true to some extent, but also if you look at earning expectations, earnings outlook, again, Japan have actually been much better compared with emerging markets or Asia. So overall, I don't expect Japan's rise is necessarily at the expense of Asia or emerging markets in general, but until we see a real turnaround in earnings outlook for Asia ex-Japan, I think Japan will still probably outperform in the short term.
So which key data out of China will move equity markets more next week? Inflation on Tuesday, or trade or money lending data which is due on Wednesday?
Well, I think the inflation data, we're still expecting inflation in China to be relatively benign, despite the potential for pork prices to rise because of the disease pig situation recently. But nonetheless, I don't think there's going to be a huge impact on government's thinking when it comes to monetary policy. Money data, I think, is critical. Simply because when we start to see money growth or lending growth starting to pick up, and that's going into long-term lending, which typically will be infrastructure or equivalent spendings, that typically drives infrastructure spending in 3 to 6 months ahead. We started to see that already in earlier part of 2013, and that has already led to some degree of pickup in infrastructure and related investments, and that's a very important driver to headline growth in China. So I think my top focus for next week will be on the money data and also in particular how much lending or financing is going into infrastructure and equivalent projects.
So, Tai, it's not been that great a time for Asian equities as was expected at the beginning of 2013. How do you expect the second quarter to pan out for Asian equities?
Well, I think, as I mentioned earlier, the earnings outlook continues to be absolutely critical. We've had attractive valuation in Asian equities for some time, but really I think we do need earning upgrades to really to help a market to gain a little bit more momentum. So in that sense, I will be watching analyst expectations very, very closely. Obviously, regionally, there are some concerns. For example, the geopolitical tension in the Korean Peninsula, geopolitical tension between China and Japan, and also the developing story of the bird flu situation in China. I think that may well create some cautiousness amongst investors in a short term, but I think it's worth also highlighting that the economic momentum in Asia continues to improve gradually, and that should be supportive of earnings outlook later this year.
What about Indian currency? Do you expect Indian currency could weaken further given the kind of macros we are working with, and it could soon crack below 55?
Well, I think if you look at the current foreign inflows coming in via either the equity or the bond market, it's been pretty resilient. And on the current account side, of course, the deficit is always a big trouble for the Indian economy. But the good news right now is that oil price seems to be stable, gold prices seems to be stable, possibly going lower, and that will help to improve the current account position of India. So I would argue that the INR in a short term is likely to be stuck at a range-bound situation, and if we do see some pickup in the economy creating more inflow into India, I think that could actually help to stabilize the INR even more.
Tai, you advise an overweight for India in Asian equity portfolios. Do you find valuations attractive for India after the recent correction? Are you expecting growth to improve?
Well, I do think that we are starting to see some early signs of improvement in growth. For example, if you look at infrastructure, we've spent much of 2012 stuck at way below the average growth of fixed asset investments in India, which was about typically 7 to 8%, and last year was really in mid to low single digits. We're starting to see that to rebound. That is very important for the Indian economy. And meanwhile, as you mentioned earlier, and correctly so, that valuation proposition in India is still very attractive, and therefore we feel that there are plenty of bargains out there in India, and combined with a moderately better economic outlook, that should allow India to be one of the better performers in 2013.
So, Taihui, if you expect that for this financial year, earnings would grow in the range of about 14-15%. So can one safely assume that the downgrade cycle is over?
Not necessarily. I think if you look at the historical performance of Indian earning growth, I think 10 to 15% is actually largely on the average. So, I think there are some upside surprises that we could get if we do get improvement in the economic data, as well as the earnings outlook for Indian companies. Also bearing in mind that we are going through a political cycle in India where we are expecting elections over the next 12 to 18 months, and that again could create additional spending from the government in order to support economic growth, and that could also offer some potential upside surprises in India.
So, Tai, you expect growth to improve for India in FY14. What themes would you play based on that assumption?
Well, we are still thinking that high-quality companies will be the preferred choice. We do expect headline GDP growth in 2013 to be better than last year, but I think we will not be going back to the 8-9% strong growth that we have enjoyed in earlier years. So we need to be realistic about their expectation. But over in terms of sector, I think consumer continues to be a very interesting sector, largely due to the growth of the population as well as the growth of the middle class. And meanwhile, I think from a banking sector perspective, again, there are interesting propositions from that sector.
And finally, what do you make of the current bout of weakness in gold? Do you think the bull market in gold is now over?
I think we've seen some of that in recent months. The reality is, with tail risk has been reduced gradually over the course of last several quarters, the appeal of holding gold become, well, not as favorable. Obviously, gold does not yield anything. and as a result, it's a bit like holding cash. And meanwhile, when you look at some of the more sort of smarter money, they've also started to retrench from gold. Obviously, two key consumers of gold, India and China, they're only making gradual recovery in the consumer side, which means that demand for gold will also grow at a more modest pace. The only area where we may see a bit more interest is probably from the central banks in the reserve holding. But again, I think with the European situation and the US situation starting to become more sort of in a stalemate, the demand for gold from central banks will again perhaps slow down. So overall, we do expect gold to either hold flat or even drift down moderately over the course of the next 6 to 12 months.
Tai, good chatting with you. Appreciate you taking the time out and sharing with us your views on India and the globe.